the most recent summit of the BRICS was the first time where those countries, so Brazil, Russia, India, China, and South Africa, had both invited other countries to join their bloc, and had also approved 6 new countries to join. And important amongst those countries, for example, Saudi Arabia and the UAE are oil producing nations. And one of the reasons that's important is because you've got these countries that already want to have an alternative currency to the dollar, or at least want to increase the amount of activity they have with each other that isn't dollar based, which is kind of a similar way of doing that, and also having energy. So what that does is it changes sort of the geopolitics of oil and energy in the world, because now Saudi Arabia doesn't have to just be dependent on the petrodollar, basically purchases of oil around the world to be based off the dollar.
Think. Act. And prosper. You are now tuned into the Money Level Show.
Hey everyone, welcome back to the Money Level Show, where we think, act, and prosper. This channel focuses on changing financial trajectories and building legacies. I'm your host, Daryl Thomas, and today you are in for a treat. Today we interview the great Dr. Nomi Prins. Nomi Prins has been active in the banking community for a long time, and she writes about her experience being on the inside of big banks. Her previous experience includes being at Lehman Brothers, Bear Stearns, and Goldman Sachs. Nomi frequently writes about how the Fed has rigged the financial markets and the economy. She is the best-selling author of the book Collusions, as well as All of the President's Bankers. Her recent book, Permanent Distortions, which we will be talking about today, is amazing, and I encourage you all to tune into this interview as she provides some insight from her experience, and so we get to learn from someone who has been in the belly of the beast and is now educating the average person. So before we get into that, please hit the like button, hit the subscribe button. Please look at this statistic here. Over 90% of the people that watch my channel have not subscribed. This is disheartening, but I hope that you all will support the channel in this easy way by hitting the subscribe button. And also I will have a couple of ads that will show up throughout the interview, but consider watching them and consider supporting the channel in that way. I want to thank you all for joining me today. Now, without further ado, let's get to the interview. So I do want to talk a little bit about interest rates. So I've heard some perspectives that interest rates are cyclical. In the current environment, it seems like that's the only tool that the Fed has when something breaks, is to lower interest rates and to print more money, right? Quantitative easing. And we're in this, it seems like we're in this weird spot, with inflation still being elevated. We still have energy supplies that are inventories that are down, especially, with oil and things of that nature. And then you still have a war going on in Russia, Ukraine, and you're seeing all these nations start to make these energy policies and decisions that affect other nations and such. And so it seems like the Fed has no control either way. What's your take on all of this?
The Fed has absolutely no control over what happens in global energy policy, literally zero. And I continue to say this, and it seems like they don't listen. But they haven't really admitted, nor will they, that they actually cannot control the sort of significant components of inflation, like inflated oil prices or food prices, for whatever other reasons that they're inflated, which is whether there's not as much supply, whether there's production cut by OPEC or Russia, whether there is the ongoing war of Russia on Ukraine, curtailing wheat supply on the commodity side. All of these things have literally nothing to do with the Fed, and they're not in the purview of the Fed to be able to control. So when it talks about controlling inflation by raising rates, it really hasn't. There have been incidents of inflation coming down at the same time that the Fed was raising rates. But if you look, for example, at oil prices over this year, oil prices are at highs for the year. Gas prices are high for 2023, are highs for the year. And interest rates have continued to go up. more slowly than last year, but they have continued to go up this year. So Fed raising rates to fight inflation, oil prices inflating through things that have nothing to do with the Fed. That's just the reality. And so there is this like disconnect between what the Fed says it can do and the just general anxiety that puts into markets and just people's ability to pay for mortgages or car loans or any of those things, all of which have higher and higher delinquency rates now, and default rates are creeping up because payments are more expensive, while they can't actually control commodity prices at all.
Yeah, it's I always tell my audience, the Fed can't, print energy, they can't print oil, and I mean they may be able to temporarily impact demand, with interest rates and such, and sucking liquidity out of the system, but at the end of the day, the inventories and our national policies and production has to increase in order to curb that inflation. So the Fed, the Fed is obviously in a pickle, and we're at the point where our deficits are 1.5 trillion. Our national debt continues to balloon, right? I mean, I think before the year 2000 we had less than 5 trillion in debt, and now we're going on 33 trillion, something of that nature. How does this end? It seems like it's going to end badly.
It's really bad. I mean, and again, this is where I mentioned the banks that are failing. I mean, one of the things that we're seeing is that banks who bought treasury bonds in order to sort of store their money safely in the case of risk on their side, whether through bad decisions or depositors leaving or whatever, have seen the value of those treasuries go down as rates have gone up. And also at the same time, the government has been borrowing more money at higher rates. So that means the cost of their borrowing has increased at the same time their debt has increased. And unfortunately, this is also a situation with individuals. The total amount of credit card debt, for example, in this country today is at record highs. And it's not at record high interest payments, but it's very close. The amount of interest that credit card companies are charging for that debt. So it's like there's more and more debt and it's more expensive. That's not a good situation for a country to be in. It's not a good situation as we know as individuals for people to be in. And people are very stretched and using this debt in order to afford basic items. So the Fed's tinkering around the edges, but the reality is the big picture is the massively escalating debt of the country, the massively escalating cost of servicing that debt, which is now about 1% average GDP. That means that if GDP is growing by about 2.5%, which is very small, which is about what it's growing right now this year, about half of that growth is basically coming from our payments on our debt. It's not actual growth. The Fed doesn't appear to understand this, but that's just the math. And again, that's not good. If the value of treasuries goes down and interest rates stay where they are, even go or start to creep up a little bit more with the continuation of this policy of the Fed, again, not as aggressive as it was last year, but still there, it becomes really difficult for people to borrow money to pay for that debt, for the country to borrow money to pay for that debt, and so you just push that entire problem on a national level and also, in our own homes to the future. At some point that there are breaking points, and usually these breaking points happen to people before they happen to governments, because the U.S. government has just allowed itself to continue to increase its debt for the next 2 years. That was the deal that was struck in May. For now, that means at that time debt was just under $32 trillion. Now it's just over 33 trillion. That's in from May to September, that we basically just borrowed $1 trillion more, right? And we have the potential to continue to do that, for another 2 years after this May. So we're talking about, $3-4 trillion that I would not be surprised is added by May 2025. And again, at higher rates and higher servicing, all of that comes out of real economic growth. Yes, the government still funds things. Yes, we passed an infrastructure act. Yes, we have certain commodities that are prioritized by the government, by the Department of Defense, that we need as a country for national security, national energy policy. But at the same time, the amount that we're borrowing is increasing by more than our ability to use that money to grow our economy. And the Fed's just merely kind of in the way making noise about why growth is a problem.
Yeah. Wow. This is
It's heavy. It's heavy. And it's to me, it's very clear that I mean, this is just what's happening. And as people who get into high debt know, like, unless you start to pay it down, or unless you sort of use what you've borrowed to whether it's to create a business or just to do something that can eventually at least pay off that debt and hopefully also create positive cash or returns after that, you're in a sort of ever growing hole, which is kind of where our country's at.
Mm-hmm. Yeah, there seems to be these competing. Well, it seems like you have the government spending and you have the Fed tightening, and like they're like competing with each other right now. It's
like they're not talking to each other; they're just making each other worse.
Yeah. This is very interesting. And so, I want to get your take on. I've asked a few people that have come on my show about like retirement. So I reach different ages of people. Mm-hmm. For me, I don't think Social Security gonna be there when I get the age 65, or they may push the age to 100 years old or something, right? So I just don't foresee it being there. I mean, it seems like the government is having to, increase budgets. They're having to spend more money to keep the average person afloat, and I mean, they're talking about another cost of living adjustment next year. And, nothing against like the people that receive those, like, I know a lot of people that receive those, but we're spending money that we don't have. And this money has to come from somewhere, or something is going to happen. So I'm just kind of wondering, like, where is this money going to come from, or what's going to have to give?
I mean, those are very excellent questions. And with something like Social Security or Medicare, basically those government programs where people have effectively paid into those programs, and the idea is that the government is sort of safeguarding their contributions at some sort of inflation or cost of living adjustment. That's going to continue until the government can't sort of borrow anymore to cover all of that. And Social Security has some protections around, as does Medicare, because people have paid into it. As our demographics change, as there are fewer and fewer people to basically input money into the Social Security system, and more people are living longer and drawing funds from it, that's just going to continue to stretch that situation. And how that breaks, is that the people coming into the system are just going to either not have it. They're more likely have a very, very small to potentially insignificant amount that they may receive when they do retire, because it's simply, even if you're printing or borrowing to sort of make up for that differential, it's at some point there's simply not enough money coming into that system and not enough money being borrowed to maintain it. And there are two things that will happen. Again, one is people coming into Social Security won't, as you say, have it, or have something, really, really insignificant when they're of age, or Social Security rules have to kind of be changed. In other words, and this is not popular in Washington or really with people, but have people who make more put more into Social Security. That's not popular because it sounds like you're taking from the rich to give to the poor, and that's not popular among the rich. But that's to really just balance out the demographics, potentially. But unless any of those things happen, the printing or the balancing, at some point there will not be enough money to create adequate payments, meaning payments that can cover like any portion of rent or whatever, for people that are sort of at the early stages of that, entering that system now. However, for people that are older, that are watching your show, my recommendation is that you keep your money. If it goes away, it's not going to happen like in a second. This whole budget noise that happens with Congress people, arguing back and forth as to whether or not it's going to get approved, and is the government going to stop, and all that stuff all works itself out. The government's not going to stop it. There's definitely pockets that can reach. Agreements are going to be made. It's just going to be embarrassing, as spectacle. But if there is ever a point where Social Security will be tailored down, I think that will be notified to people. It's not going to be like tomorrow, all of a sudden your payments are going to go away. I think there's going to be a long enough term that people have the ability to make those decisions, to take money out in lump sum. I mean, I think there'll be deals at that point. We're not at that point but at that point, people who are sort of further along the system or older should just pay attention for those things happening and just make the decision accordingly. If the government says in 6 months, we're basically giving you a choice between a lump sum or, a decline in your payments over the next X years after that, well, then take the lump sum or whatever it is, make those decisions at the time. But for now, if you put money into it and you're receiving the amount that you expected and you haven't heard that notification, you can trust it for now.
Mm-hmm. And Lord have mercy for whoever's in office when that time comes.
Yeah. It's or we could just see down at like 50, 60, 70. It's not, we do have the ability to continue to borrow. It's not a good look. It doesn't go into growth, but I mean, we have seen more than doubling of our debt in the last sort of decade less. So I mean, it's not like that can't happen.
Yeah. And it seems like this plays into like a bigger picture of nations rise, nations fall. You get the debasement of currency. At some point, the dollar is going to be devalued even more. I don't know if it'll be pennies on the dollar at some point. I don't know if when it gets at 99%, it's just going to be 99 point, whatever, right, of its previous worth. And so, or lost that value of its previous worth. And so, we have this whole thing with the BRICS, new Bretton Woods, and other nations seem like they are, frustrated with the faith and credit of the United States government and such, and how you write about this, how, the Fed makes these decisions that impacts international economies and markets and such. And so, what are you foreseeing there? Hello, everyone. Sorry for the break in action, but I want to tell you about the link in my description below. This is to the New Orleans Investment Conference. This conference has been around for years and have brought many people out, such as Milton Friedman, Gerald Ford, Alan Greenspan, and Margaret Thatcher. This conference is put on by Brian Lundeen and his team. Brian is the CEO of Gold Newsletter. This year, they're going to have speakers such as Jim Rickards, George Gammon, Peter Schiff, Rick Rule, Danielle DiMartino Booth, Lynn Alden, and many others. Now, I encourage you to click the link in the description below. You can choose to attend the live event, which I will likely be at, as well as the event that is live streamed. You can support the channel by using my link below, so I encourage you to check that out. Now, let's get back to the interview.
Yeah, so I wrote about in my last book, in Collusion, about my prior to this book, Collusion, before Permanent Distortion, which is the one I just wrote, but they're kind of companion books. And in the wake of 2008, all the central banks around the world, especially the ones that were like non-G7, so the ones that were looking from the outside into what had just happened, which is that the financial system had just imploded in the United States, and that had economic ramifications around the world. Not just cutting rates to zero, but just with really hurting economies throughout the world. And so these nations started to say, all right, well, we need to really protect ourselves against the dollar and against monetary policy and banking policy in the United States. So this idea of a BRICS bank, which was subsequently renamed the New Development Bank, began. And the idea of that was to just kind of put a foot in the sand of nations that weren't part of the Bretton Woods sort of agreements post World War II. They weren't sort of interested in being dependent on the dollar and dollar levels forever. And they started to find ways and to have conversations and summits about breaking away, whether that meant trading with each other more, so that there was no need to convert that currency, that exchange, back to dollars first to basically trade goods or services or buildings or infrastructure or innovations or whatever it might be. And then recently, fast forward 14 years, the most recent summit of the BRICS was the first time where those countries, so Brazil, Russia, India, China, and South Africa, had both invited other countries to join their, bloc, and had also approved 6 new countries to join. And important amongst those countries, for example, Saudi Arabia and the UAE are oil producing nations. And one of the reasons that's important is because you've got these countries that already want to have an alternative currency to the dollar, at least want to increase the amount of activity they have with each other that isn't dollar based, which is kind of a similar way of doing that. And also having energy. So what that does is it changes sort of the geopolitics of oil and energy in the world, because now Saudi Arabia doesn't have to just be dependent on the petrodollar, basically purchases of oil around the world to be based off the dollar. They can be traded with, there was just the first UAE trade of, I think it was 1 million barrels of oil were bought by India in rupees. Right. So instead of in petrodollars. So basically taking the US out of and the dollar out of being the middle country from a currency perspective. So this is just something we're seeing. It's growing. I would say it's at like infancy. It's kind of like a toddler, and it's not going to take the US dollar out of commission. The economy is too big. The US is too powerful on so many levels and has a lot of allies, that help that. But it's definitely moving a lot of other countries into a space where they feel they can be less dependent on transacting in dollars.
Yeah, definitely. So, Nomi, as we begin to wrap up, I think about my family, and many of us work live paycheck to paycheck. And there's a lot of people out there that are unaware of these things that are developing, these things happening in the background and such, and mainstream media does not, give us this information.
Right.
And so that's why I'm definitely appreciative of you coming on. What should people be doing? I mean, at the Real Symposium, you mentioned that obviously real stuff, resources and such. I recently had Neil Howe, author of Fourth Turning, on recently, and he talked about, people are at some point are gonna have to invest in real stuff, like gold, resources and things of that nature. And so I wanted to just get your take on like how people can be, preparing and I mean, because we could wake up one day and just like the quote that in the first sentence of your book, like. We could just wake up one day and things could be in shambles. So what's your take, and what do you think people could be doing now? Hey everyone, sorry for the break in action, but I have to let you know that I am now an affiliate with Miles Franklin. Miles Franklin has been a bullion dealer for over 30 years, and they provide some of the highest quality service to their clients, as well as fair pricing on bullion products. So purchasing bullion through Miles Franklin not only stores wealth for yourself, but you're also supporting this channel to continue to provide free educational material for retail investors and those who may not be aware of many financial concepts that I discuss on this channel. So you can get started by sending an email to info@milesfranklin.com or calling 952-929-7006. Be sure to let them know that Daryl Thomas or the Money Level Show sent you, and I will receive credit for your service. I thank you all for considering this. Now let's get back to the interview.
Yeah, I mean, just on a lot of the things that you've just said, Daryl, I'm a big believer in real assets that have real use value, meaning you can build stuff with them. You need them to power the world. You need them to transform the way we power the world, and you need them to preserve value because they are tangible and they are real. And along those lines, a lot of what you said, gold, silver, copper, metals, materials that are part of what we need to do to effectively both build our world and also retain some of the wealth, or preserve it or grow it along the way that isn't on paper. Again, we talked about the Fed can't print oil, it can't print gold, it can't print copper, it can't print uranium, it can't print cobalt, it can't print many about 50 or so defense rare earth minerals that are on on our national security lists. And I think, not to get into chemistry lesson, but a lot of these elements, I think, will continue to hold value and grow in value because we need them and because we can't print them. So I think it's important for people to sort of get educated on that area. Mining commodities is a very small part of where people think of investing when they do invest. And I know this isn't an investment show, but if we think about just where you kind of want to consider positioning your future, it's something to dig into and get educated on, those particular areas. And if you can use it and touch it, it has value.
Mm-hmm. Yeah, definitely. That was, like you said, something very simple there that really just had a light bulb go off in my head again. And when we say owning something, even though you may not physically have the oil in the barrel, like you're owning a piece of a company, a part of a company, a share of a company or such. And so it's important to have that mindset whenever you're owning natural resources or looking into that, which we talk about that quite a bit on this channel, natural resources. And we believe we're in a commodities bull market, and the governments are passing all these policies to, carbon emissions and all these things. And we don't even have the supply yet. So I think that's where we're headed. So you recently obviously just released a book last year, almost a year ago, right? And so I encourage you all to go pick up this book because it's very important, and it has some really good information that can save your financial future, I would say. And then also you have a emailing list, and so I wanted to give you an opportunity to speak where people can find you, sign up for that emailing list and such, and things of that nature.
Thank you so much, and thanks for having me on, Daryl. It's been such a great conversation. I really appreciate it. So my website's really the best place, www.nomiprins.com. But on there's a drop down to just join my mailing list. It is private, it is free, and on it is really where I'm least filtered. In other words, I write once a month to people just about where I've been, what I'm seeing in the world. Recently, I was just in Norway, checking out what they're doing in hydropower. And what we can learn from that, and what the trend is with respect to that component of the energy spectrum. And so it's something that allows me to share on a private basis with people. So I encourage people to sign up so we can stay in touch.
And she doesn't spam you with a bunch of emails, you all. So
that's one time a month. That is it.
That's good. That's
and
good.
It's not even the same day each month. So it's when I have something to say.
Yep. So I'll be sure to link to those in the description below. And Dr. Nomi, I feel like I did my homework. It was good engaging with you in this conversation. And everyone, be sure to click the links in the description below to support Dr. Nomi. And thank you for coming on today.
Thank you so much for having me.